Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning pre-market webcast. Okay, here's October. We start October by blasting up to 25.23.5. This is a byproduct of the inability of the bears to convert last week's weekly pivot early in the week. You see where they had multiple chances to hold at 25.04. You can see where 25.04 went from resistance into support, and then you really started to see the climb Friday, following through Sunday night. They've come back, and we're kind of testing the hourly mid-band here in the 25.17, 25.18 area. We're actually testing the high from the Friday close at 25.17.75. So I'll be interested to see what the thing is with 25.17.75, whether they can get back below it. In looking at the new weekly pivot down at 25.0683, this is a situation where they need to test that weekly pivot early in the week. If they don't, then what we will probably get is just a lot of dip buys and higher lows and higher highs, and we just start to climb. And we're just doing it with a 25 in front of these numbers instead of a 24. That's been the reality of this market for multiple years. Multiple years. We are not overbought. Don't kid yourself into thinking that we're overbought. We're not. We're just not. So I'm heading into this week with an open mind. I want to see how the 17 area reacts. I have VWAP, proprietary midband, and proprietary moving average and 5-minute midband all sitting up between 25.19 quarter and 25.20. So this 17.75 to 25.20 area is going to be a pretty key bull bear band of price for the open today. In looking at the daily real fast, it's just, it's been a grind, and now they're trying to break out of it. So what do the bears want? Well, they want to see this Sunday night high be the high of the day. They don't want it challenged in the overnight. They want to get below 17. They want to try to move their way back towards the 9-day simple moving average, which is at 25.05 and change. It's also the area, like we saw on the prior chart, weekly pivot. So don't assume anything. Understand your risk. We were in shorts on Friday. We hit a risk marker down at 25.10. We got out of them for more than we really wanted to, but you have to be able to take a loss, and then it goes ahead and hops up to 25.23.5, and you say, you know what? Taking that -4, that -5, that really wasn't so bad because it's not a -15, and that's part of respecting risk and using disaster stops. We're going to talk about that tomorrow, 4:15 p.m. after the close. Myself, Tony Rago, Spring Heel Jack from channelsandpatterns.com, artofchart.net. So our whole audio Princetontrader.com chat room team doing a webinar tomorrow after the close, 4:15. We'll go for about 45 minutes or an hour on understanding risk. It's so important in this market or any market to really understand risk, to talk about trade management, account management, when to be wrong, how we use risk markers, and how we use disaster stops to stay in the game effectively. Okay? So watch 17, watch 23 up above, watch 06 down below. They have Monday, they have Tuesday, maybe part of Wednesday to try to test that weekly pivot. If they can't, then you're going to start to see that march up into Friday, that march up into the jobs report. All right, trade them well. I'll catch everybody for a midday update. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.